But let's talk about the person who has done their homework, who has spent lots of time studying, who does have a level of knowledge where it is time for them to jump in. Do you remember when you began? Did you ever experience that? You were trigger happy. Okay.
I was blowing $300 on a trade and I didn't know what I was doing.
Yeah. Got it. So I probably fit more in the gun shy, where I feel like no matter how much I know, it's not enough. I have to know more. Aloha, everybody. Welcome back to the Steady Trade podcast. This is a 4-part series that Stephen Johnson and I are going to do. Stephen and I did this almost 2 years ago. I think, Stephen, is it 2 years ago that we did this 4-part series, right? It's a long time. So we're going to do a 4-part series for you guys. This will be kind of, 20 to 30 minutes. We're going to speak on 4 different topics. This first episode is going to be about those traders who find themselves trigger happy or gun shy. And I'm curious what you are, the listener to us right now. Do you consider yourself gun shy or trigger happy? Stephen Johnson, which one are you?
I'm definitely way too trigger happy. And a lot of really good traders, a lot of really great traders are trigger happy as well. I mean, first of all, it's what is it best to be? Trigger happy, gun shy, somewhere in the middle.
I don't think either one of them is good.
I'd say in certain contexts and situations and on this journey to profitability,
yeah,
I'd say it is good to be one and one in the other. But first of all, you're straight away reminded me of something that Dan Irish said. Dan Irish, a friend and trader, he was on Twist when he passed $1 million. I think he's at 1.6 now. Wow. And they were talking about with Dan Irish, we were saying, are you a bid guy or are you an ask guy? Like, do you like to hit the bid or do you like to hit the ask when you're going long? So when you go long, if you market order, you'll hit the ask and you'll take it out straight away. Where you won't sit on the bid guy. You'll slap that ask. And he said something quite funny. He said he slapped the ask because he likes to support the decision in the trade that he's made. He likes to support the trade that he's made by not just taking the trade but also hitting the ask. Now that was, I hope that makes sense.
I'm not sure I completely understand it. And for the listeners that are new, it might be a little confusing to them. So let's break that down, because this is really good language that I want to understand. And I'm sure other newbies want to understand.
Yeah, it's a bit on the side, but so obviously when you're trading, there's a bid and there's an ask on the level too. Now you can place your order on the bid. Okay. And wait to be filled, which is adding liquidity to the market.
Yeah.
Or you can just slap the ask and just, if you buy on the asking price, you're immediately in the trade because you're immediately saying, I'll take the higher price on the level too, where the bid is just sitting, waiting for someone to come down to you for that buy.
Yeah.
And he said he loves to slap the ask. He loves to hit the ask straight away, even though it's not advantageous because he's getting a worse price.
Right.
But he likes to support his own trade by taking the ask out for everyone else who's hitting that long as well, which I thought was quite funny. But basically, a lot of the top traders that I see, coming back to the question, I would say we're trigger happy in a certain way. I've been in rooms with the likes of Dan Irish and Bryce Toohey, and those guys are pulling the trigger. In ways I've not seen. There's a lot of deaths. There's a lot of small deaths, a lot of losses, a lot of small losses. But there's a lot of big gains, and the reason is because their strategy is a 1%, 2% risk for 10, 20, 30, 50% reward.
Yeah.
So they can be trigger happy. They can take 30 losses in the 31st works and they're profitable. And that's good, but you shouldn't be. They know exactly what they're doing, right? They've been in the years, know exactly what they're doing. So it's fine for them to be trigger happy. They know the risk reward. They know it's a numbers game. They know if they hit enough stocks, they'll get the reward.
That's interesting. So you're saying if you're trigger happy with the restraints on, then it can be a profitable experience.
Well, they've got such good risk, and the very long buys. So like, if the stock doesn't go when they buy, they cut it. It's like, that's not going right now most of the time, unless they've got a set risk on a larger cap stock. If it doesn't go straight away, they're out. They're in and they're out. They're trigger happy in, trigger happy out. But they've seen it a million times. They know the probabilities. They know the risk. And it's almost, for me, it's a numbers game, not taking any setup. But if you take 10, 15, 20, 25 good, average to good setups in a day, 4 will work, 5 will work.
Yep.
Be trigger happy. It's good to be trigger. Pull the trigger. Do you know what I mean?
I do. I do. I almost wonder, is there another phrase we could call it? Because I think for the most part, at least, and this is maybe my naivete, trigger happy to me sounds or has felt like somebody who's just shooting and what's that famous saying about shoot and then aim? Yeah, it's like you aim and then shoot, but when you're trigger happy, you just shoot and then you aim, which is too late now.
Yeah, or throwing mud at the wall and hoping that some of it sticks.
Exactly.
To a degree, though, if that's A quality mud and it's got the perfect amount of liquidity in the mud and it's the perfect amount of stick, and you're throwing it really well, throw that mud.
Yeah,
throw the mud.
But that doesn't feel like trigger happy. That feels like I am specifically casting a big net. And even though I'm not going to get all the fish that I love to eat, I will get a bigger chance at catching the fish that I want to eat, even though I'll have to throw a lot back. That's
all the likes of Dan and Bryce are doing. They're just catching those fish.
Yeah.
They're going out to sea every day, sunny, catching the fish.
Yeah.
That's all they do.
All right. So let's talk about the people that are not managing their risk like the two of them. Let's talk about those who are just, pushing the trade button without a plan. The people who are coming from a place of not really having the patience or the risk management or the doing the homework to come up with being strategic. What would you say to them?
Yeah, it's like if you're like really trained with a gun and you're trained to use it well, you can pull the trigger all the time, right? And you're always gonna have a good shot. If you don't know how to use a gun and you've had no training, you're gonna kill someone and you might even kill yourself. And that's kind of how it works.
Yep.
So if you're untrained in stocks, because stocks are a game where you have to think fast, be fast, react fast, act fast, be fast, do fast, think fast. If you don't have the ability to think on that pace or level, and you just pull the trigger, you're just making a mess, right? You're just gonna, if you pull the trigger with probability on your side, you're gonna make a lot of money, like a casino makes money. If you pull the trigger without probability on your side, you compound in losses. So in your earlier stages of your career, it's recommended to observe more and trade less.
Yeah.
But let's very small and just, do you know what I mean?
Yeah. Or trade very small. So let's just talk for a minute about, the new trader comes in, they're very excited. They want to be part of the action. They're like, I've read, let's say they've spent a moderate amount of time studying, a moderate amount of time watching these videos, listening to Tim Sykes' courses, watching all these steady trade podcasts. And now they're like, I want to get out there. What would you say is the ruler or the filter that they need to ask themselves? What are those questions before they pull the trigger, before they start to trade, to double check? Is it because you're just impatient and you can't wait to be in the game? Or is it because you're ready? What are the questions they need to ask themselves?
No, it's just, I mean, you have to ask yourself why you're taking the trade. And if you ask 50% of the guys out there, why did you take that? They'll think they've got a good answer in the head. But if when you ask them to articulate that answer as someone who knows what they're doing, to like a pro trader, they'll not be able to articulate a convincing answer. Wow. So I would say before you pull that trigger, write down 5 reasons why in this trade. And if you can't come up with 5, can't come up with 5 good reasons, probably shouldn't be in the trade.
Wow, that's really awesome. I almost am thinking it would be great to have a service where you have literally the only way you get to trade is if you could answer those 5 questions, and the AI, the algorithm says, yeah, these are legit. And if it doesn't let you go and trade. Wouldn't that be a cool service?
I mean, yeah, but I mean, honestly, but once you know what you're doing, like the 5 reasons are automatically in your head all simultaneously. But for a new trader, it's like, why are you taking this long? And they'll not think like high volume, low floor, large range on the chart, hot sector, history of running. Do you know what I mean? They'll not. Yeah. Intraday is double bottomed quite well. It's consolidating well. That's just how that bottom long trend. It dipped under the trend, but then it popped back above. You'll not get that.
I love that you just
for example,
you just quickly spitballed 5 reasons. So what are the other so let's revisit those and let's add more, because right now what we're saying to anybody that's listening is that unless these 5 of these collection that Steven's going to speak to are happening when you're taking a trade, you probably shouldn't be in the trade.
So, but there could be hundreds. I mean, it could be, for example, it's the only runner of the day, so it's getting all of the attention for a long, or it's trading the most volume it's ever traded in its history, or it's low float, or it doesn't have much dilution, or the story's particularly catchy, or it's breaking out on a multi-month daily chart into new levels, or it's just broke a significant downtrend chart, or it's traded 15 million pre and it's just a high probability that it's going to squeeze at least once, or it's consolidating on the intraday, or it's in a hot sector, or it's sympathy to another stock in a hot sector, or it's on the intra, we've just had a big dip, but that dip got bought immediately up, which means there's someone with money underneath buying these dips. Why is someone with money buying the dips? There's endless reasons of why a stock can go. If you've got 5, go for it. If you've got good risk reward.
Yep. So the person that's trigger happy, in my experience, is, and the negative version of trigger happy is somebody who is just needing to have that sense of confidence or a sense of belonging. Like, I'm playing in the game that I, am studying and doing all this energy to be a part of. And they just want the experience of being in the trade, especially with brand new traders. What I see is that they're just kind of like, they're like a horse at the starting gate and they just can't wait to run.
Yeah, no, absolutely. It's like when you learn surfing, you want to go straight to the back of the ocean and join the biggest waves when you should be right at the front surfing that white water.
Yeah,
it's very natural to want to be the best, want to join the best.
Yeah,
want to immediately skip past the beginner stage, because beginner stages are associated with people who aren't good, might give up.
Yeah,
not at the top, not the best.
Yep.
So it's natural for people to say, look, I'm really amped up. I'm really pumped. I can go straight to the next stage.
Yeah.
It's very natural. Everyone does it in everything.
Yeah, for sure.
But
the costs here are just so great that
these days it's not so bad. I mean, there's the famous quote, whether it's Edison or Einstein or who, but it's when you fail 1,000 times, you're just 1,000 steps closer to getting the right idea.
Yeah.
Or if you fail 990 times, you're just one step away from the right idea.
Yeah.
These days, commission-free trading, fail away. But
Yeah.
I wouldn't say fail away, but fail 3 times, 4 times in a day.
Mm.
And then look back the next day and be like, why didn't they work? Do I know?
Yeah.
Can I ask someone?
Yeah. That's a really good point. So
Well, that's
even in the
trade.
failing, find a way to learn from the failures. What was it about that trade
Fail is
that,
great.
yeah. Yeah.
Fail. I mean, look, like I've just took my third big loss of the year.
Mhm.
And like me dad's like, are you not devastated? I'm like, nah, because failing's good.
Yeah.
Failing is good. And now I know what to do again. And now I know I was doing it right then. And it's always good to fail. Always.
Yeah. 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 You know, I think
small costly fails though, ideally.
well, that's the question, right? How do you make sure that your risk management is such that your failures are not going to be so costly financially that you can't, you know, I think part of my concern about the people that are trigger happy in trading is that it damages them on an emotional level. You know, I just released a course called Trading EQ for StocksToTrade, and it talks about the emotional side of every trade you take. It's either going to build up your confidence or it's going to strip it down. And so part of my concern is yes, of course, I want people to manage their risk and let those failures be not too costly financially. But I'm also seeing the effects when I coach people around what happens to you psychologically when you keep experiencing failure. So that's also part of why I am always, cautioning people, if you're too trigger happy without being conscious of why you're taking a trade, then you potentially have to climb up further emotionally to a place of confidence. You're not going to trust yourself if you're trigger happy and you're just taking trades left and right willy-nilly. And you need to build that confidence to yourself over time.
Yeah, no, I mean, I think for me, it doesn't matter. It doesn't matter how many times you lose, as long as you learn from every loss. And then there's a huge confidence boost in, I know not to do that. Or now I know why that didn't work. And I think the confidence gained from the lesson and the knowledge gained from the lesson outweighs the low self-esteem of the loss, because anything that you learn from and correct is an achievement. It's a win.
Yeah.
The loss becomes a win because you've got to lose in the beginning. There's no way around it. You've got to.
Yeah,
so
exactly.
Every loss you learn from is a win. So there's absolutely no reason. Even a blow up is a win.
Yeah.
Honestly, even a blow up is a win. As long as you learn from it and you can manage it.
Yeah. And that's the key. Can you manage it? And that's why I think it's so important to just be managing your risk right out of the gate, because even in the beginning stages, for you to be comfortable with loss, it's got to be within reasonable amount that you have emotionally and financially prepared for, so that when that loss comes, it doesn't devastate your account and it doesn't devastate you emotionally.
Yeah, I mean, look, for me, that's not the danger. In the beginning, you're trading small. You're very fearful of the market. Every loss hurts. Every $10 loss hurts. A $200 loss destroys you.
Yeah.
That's not the danger. The real danger in the market is, for me, is when you learn how to trade. You get comfortable / numb with experience and loss, and then you go on an extremely hot run where you think that you're better than the market, and where you think that just a bad loss isn't going to happen, and then you take a massive loss. It's happened to me. It happens to many traders, and that's the crushing defeat.
Yeah.
And that's something else for another episode. But you've just got to remember, like, the psychological battle in the beginning, it's just small. It's just small loss, small learn, growing, and on to the next.
Yeah. let's talk about the versus gun shy part of this equation. So those who are gun shy, in my experience, are people that usually they're lacking confidence, perhaps lacking confidence personally, perhaps lacking confidence in their edge, perhaps they're lacking confidence in their experience or in their setup. Let's just talk a little bit about like what happens when we have the extreme of somebody being trigger happy where they're completely gun shy.
Yeah, no, I love that. I love it when people ask us this, and it's a common question that I get. It's I just can't take the trade, just can't take it.
Mm-hmm.
Sit there, I look at it, I watch it, and I don't hit it, and then it goes the right way. And my response for years, and I've never changed it, is if you are gun shy, there's a reason. There's a reason you're not pulling the trigger, and it's probably a pretty valid one. In a market where 90% of traders lose, that takes most traders the average 3 to 4 years, and the elite crack it in 2, geniuses crack it in 1, crack it in 2, but generally 3, 4, 5 years. Yeah. If you're gun shy in year 1 and 2, good, because you should be. You really should be. And there's every reason why you should be.
Yeah. So I really get that. It makes a lot of sense because most people probably don't come into trading realizing how cautious they have to be and how much there is to learn. But let's talk about the person who has done their homework, who has spent lots of time studying, who does have a level of knowledge where it is time for them to jump in. Do you remember when you began? Did you ever experience that? You were trigger happy. Okay.
I was blowing $300 on a trade and I didn't know what I was doing.
Yeah. Got it. So I probably fit more in the gun shy, where I feel like no matter how much I know, it's not enough. I have to know more. So the people that are probably coming from that place, when I've talked to them, what I'll say to them is, how long have you been studying? How much risk management are you making sure you have? Are you clear on what your setup and pattern is? And when those answers are all yes, then it comes down to them usually comes down to them not having the confidence or the comfort with being incorrect. So let's just talk about that. If you've done your homework, if you have your due diligence, if you're managing a risk, but then you're just afraid, to be confident and take that potential loss, what would you say to those people?
I mean, I've not come across anyone who's been in the game 2-3 years who still suffers from being gun shy. But I mean, if you do,
not 2 or 3 years in the game, but like let's talk about beginner traders that have been paying attention for a year, and they should have a little more confidence. They've earned it.
I mean, in this day and age, I'd say, what have you got to lose? What are you going to lose? I mean, you're going to go long $50. If it goes wrong, you're going to lose 3%, which is $1.50. You're going to lose $1.50 on your trade. You don't pay commissions anymore. If you do, you're going to lose $2, $3, $1 in, $1 out. Is it really that much to lose $3? And you might win 50. You might win if you go along for $50 and you win 10%. That's $5 you've won.
Yep.
Win $5, you lose $150. You've done your preparation and study. There's more chance you're going to win than lose because you've done your work, right?
Yeah.
Done your research. You've done your work. You know what you're doing.
Yep.
Why wouldn't you take a trade that you can win 5 and lose 150? And if you do lose the 150, what's going to happen?
Yeah.
If you can't buy food the next day, there's a problem. Probably shouldn't be trading.
Exactly.
Can't buy food the next day if you lose that $1.50. But if you've got $50 in your account and you can lose $1.50 40 times, 35 times, that $50 is great price to pay for education. That's what I would say.
That's awesome. I love that. It's the price of admission. It's the price of your education. What I have seen is, I think there are people who err on the side of wanting to be perfectionists. I've definitely bumped into them in the webinar that I did for Stocks to Trade recently, and Instagram Lives, where I do speak coaching for people. I have noticed that there are these people who will come from perhaps a huge career where they were at the top of their game, and then they're coming into trading. It's completely new to them. They feel ignorant, they feel unprepared, but they've spent time listening and preparing themselves, but they're afraid to not be at the top of their game. You know, they got to the top of the game, maybe in another industry or another business or another specialty. And then they come here and they are like, one gentleman was like, you know, I was like, how much of a perfectionist are you outside of trading? He was like, oh, I'm totally a perfectionist. I'm like, well, this is going to be hard for you then, because now you're not going to be perfect because you're new at it. You're only a year or two in. So that's what I've seen, is that some people, like, they're afraid to not be perfect. And I'm like, you're not going to be perfect here.
But the answer to that is that trading is not, it's not a business where you're an employee. Trading is it's a sport / competition. It's a competition. And the best perfectionists and the best people who are seen as perfectionists, icons in sports, they are perfectionists. And you can be a perfectionist. Be a perfectionist in your preparation. Be a perfectionist in your study and your routine, and how many hours you do and how well you stick to your schedule and the resources that you learn.
Yeah.
And how many times you recap on your trades. Be a perfectionist. But on game day, Michael Jordan does his routine. He perfects his craft, and he goes out there and he leaves it all on the table and he just goes for it. Right?
Yeah, for sure.
He's not a perfectionist in the game. He misses shots.
That's right. That's
He's
that great quote.
In his preparation.
That great quote that he talks about all the games he lost, all the shots he lost. You know, he talks about that. That is just a huge distinction. I think, Stephen, what you just spoke to is be a perfectionist in the prep, in the setup, in the studying. And then you don't have to take the concept of being a perfectionist as a trader forward.
Just go out and leave everything you've got on the field, and that's it. And you've got to lose to win. You've got to lose to win in trading. Losing is being perfect.
Yeah. Very good point. Very good point. All right. We're going to close it up there, guys. This is part 1 of a 4-part series. The next episode, I hope you'll join us for, will be about over trading to stay stimulated, how sometimes that can happen, especially to new traders. We'll see you in the next episode. Thank you for watching. Stephen Johnson and I we're going to have to come up with a fancy name for our little 4-part series. What should we call it, Stephen?
It's Trading EQ.
Trading EQ, but we can't call it that because that's my course's name. But we'll call it Sound Bites from Trading EQ. Yeah.
Sound Bites.
Okay. Yeah. All right. We'll see you guys in the next episode. Thanks for watching us.
I hope you guys enjoyed that video. Thanks so much for watching and being part of the Stocks Trade community. We wouldn't be here without you guys. Make sure you hit that like button and subscribe to the channel if you have not already. Our goal is to hit 100,000 subscribers by the end of the year, but we can't do it without you guys. So if you like what we're doing here and you want to hear more, please, please, please hit that subscribe button, and I'll see you guys on the next video.